Equity peaks across the board in the portfolios today. We went over the daily results. Smooth uptrends, not many trades, but some good trades on the long side. Don't necessarily have to agree with the market action to trade it. So you don't. Your trading should not be a vote of what the market should do. It should be a vote of what it is doing. And so, you go through cycles. So cycle is, we went through a challenging cycle. Q4 and the beginning of the year, see some sideways patterns in these equity curves, and then it's breaking out again. So could be a good time to start trading the portfolios if you are not trading them. And I do recommend a diversified set of portfolios. You can trade anywhere from one of these small micro portfolios to one of the large portfolios. So this is the All 78 from November the 24th, up 79K on the year. And it started the year in a drawdown, and it was down here for a while, and now it's making its way back. And to show you how those cycles work, let's look. I'll show you the SR counter trends at the end. All Strategy X is short list 51, equity peaks plus 26K on the year, very consistent, low drawdown. You see the equity curve, very nice and cyclical there. Start in a drawdown. You want to get set up on your computer, VPS, and then start in a little bit of a drawdown on any of these. $25,000 drawdown is the worst case drawdown in this setup, which is the All Strategy X's 51 short list plus 7 new strategies going into 2021, and it is at a 0 drawdown as well. Only one of these portfolios is not at an equity peak today, so all the current portfolios are at equity peaks except for one. And so you see how this one has done. Good January, slow February, and then a very strong March, April, up 68K on the year. And the Stock Index Portfolio 27, up 17K on the month at a new equity peak. 200K portfolio up around almost 10K, 98.85 at a brand new equity peak. 50K portfolio is the only one that is not at an equity peak today. It's in a 1257.50 drawdown, means it's $1,257 away from an equity peak. It is up on the month though, up on the year, and looking forward to new equity peaks in this one as well. And then we have the micro stock index and micro gold portfolio. This one struggled the most. It made a worst case drawdown, and then it's had a strong recovery. It's breaking out. We've also offered the conservative version. Since this did make a worst case drawdown, the risk is larger at 43.1250. The conservative version has half the drawdown risk. And so you see this one has less Nasdaq strategies, has 10 less strategies overall, and only 4 Nasdaq strategies. These are the strategies from the 200K portfolio, the E-mini S&P, E-mini Nasdaq, and gold strategies from the 200K portfolio that has been so consistent, trading just one micro. And you can see the consistency, just trading one micro across the board, very consistent. It's not a lot of big swings in this. It's you can trade this conservatively. You can risk a worst case drawdown when you trade this on one micro, and then go from there. So that is the conservative version. SR counter trends, we've talked about how hot those were this year and how they did last year. This is an example of cycles. Sometimes you get many years of a market pattern, and then you start trading a system, and then you go through a pandemic and you get patterns that are not normal. And so systems may go through drawdowns. Doesn't mean that a system is necessarily optimized, but the patterns do not work in that market environment. So what you see here is the SR counter trend 234. It's at a brand new equity peak, but during the pandemic it did this. Had a really hard time with all the V patterns, and so wild swings, and the market is back to waves and lower VIX. We anticipated that. We called for that, and a lot of the SR counter trends are in our portfolios, but this is an example of the portfolio that includes just the SR counter trends. So that is an example of the cycles in the markets, and you can look at some of our old portfolios. We transition portfolios when markets change or when we find a better way to do something. Changing at a new equity peak is a good place to change. If you can if you can exit at an equity peak and make your transition at an equity peak, it's better than doing it at a drawdown. You don't want to get out in a drawdown and get into something that's at an equity peak. So we're at equity peaks for most strategies now. So if you want to change, you want to start something, get it set up and wait for a drawdown to start. And if you just want to start now, start with one of these lower risk portfolios such as the conservative, and then start trading this one and wait for some of the others to go into a drawdown and then start those. So that is the equity peaks. Like I said, all of these, there's 8 of them now. 1, 2, 3, 4, 5, 6, 7, 8. We added this conservative one this week, conservative version of this micro stock index, micro gold, and these are all at equity peaks except for the 50K portfolio, which is closed. So, and if you want to see the systems, you can show and hide these rows to see a list of the systems. And then when you change the portfolio, you can see how the systems change. Which systems? This represents the number of contracts traded, and 0.1 would mean a micro. So these micros are just 1/10 of the results of the minis, and you can see that. So that's the equity peak report update and how we are doing on the portfolios as of April the 8th, 2021.